I want to bring to the show Phillip Streible, Senior Analyst, Blue Line Futures. Good morning, Phil. Thank you so much for joining us.
Yeah, thanks for having me.
Well, Phil, I'd like to kick off with the WTI. It's stuck over there for quite some time. What can we imagine in terms of price range, and what is it that matters for the crude oil prices? What is moving the crude oil prices?
Crude oil prices have been stuck in a very, very tight trading range for about the past 2 months, and really, after coming off of their lows, we've settled right around this $40 range, where when we dip below 39, 38, we see quite an uptick in buying. We get north of 41, 42, we start to see selling come in. Really, we're waiting to see if the demand is going to pick up. I mean, the summer driving season has been completely muted. So really, we're working off of supply and demand. And the reality is that many areas in the United States are still on some form of lockdown, still on some form of, bans on travel bans within the United States. So as a result of that, we're just not seeing that consumption that we're normally used to.
And can we imagine a higher spread in the medium to long term between the WTI prices and the Brent future prices?
Yeah, it's really comes down to, which countries and which product is going to break away and have more freedom. And it seems like areas in Europe, some countries out there, their demand is picking up quite a bit. So I do favor Brent crude to the upside, and I think that's going to move faster than WTI.
Well, that's quite interesting. I'd like to talk about gold as well. Very interesting movements over there, and we are getting a lot of viewers' questions. So one of it is it a good moment to enter the market? And if not, what is the price target?
So I do like gold at the bottom of this risk range. Anywhere right around from 912 to about 920 has been good underlying support. Nothing's really changed fundamentally. We did get a separation between the Republicans and Democrats for another relief stimulus bill, and they're trying to pass smaller areas of it. So we did see, the dollar index fight off those 2-year lows, but we have entered some positions this morning at these lower levels. And we do anticipate that price will come back up to 1950 and above, possibly even targeting 2000 again.
And if we have to compare it to the silver, then what are you saying?
So silver's been a bit more volatile. I do like silver, but silver is more susceptible to any kind of corrections because 80% of silver's demand is industrial demand, where only 20% makes up that safe haven, that store of value, the similar characteristics that gold has. So the dollar index, again, coming off its lows. And if you look at the NASDAQ, there's a correlation between the NASDAQ and silver on the charts. As the NASDAQ breaks, silver has been tracking it.
Well, before we move to the energy majors, I'd like to talk about the natural gas. There was something very interesting. The natural gas prices have shot up nearly 60% since late June, and speculators are betting they will keep climbing, but the companies that control the country's spigots aren't so sure. Of course, we're talking about the U.S., and futures for September delivery ended Thursday at $2.35, which is up 6% from the same time last year. So what kind of movements can we imagine in the medium to long term, and why is this sudden decline right now, 1.67%?
Yeah, it's going to be a fluid situation with nat gas because we have a couple different tropical storms that are making our way into the United States, and are actually coming from all directions towards Texas, and then also down in the Gulf and in Florida. We have these tropical storms that are merging in here. So natural gas prices tend to rally on that because of the fact that there's a lot of those producers along the East Coast and in that region down in the Southwest. You're also seeing a pickup in exports to China from the U.S. on liquid natural gas, where we have seen muted purchases over the past couple months are starting to increase again. We do come in at the end of the year, it gets a little bit cooler, and you'll see natural gas demand pick up. So it's at a nice high level right now. Volatility should pick up in it quite a bit. So these small percentage gain or losses on natural gas, I think, are most likely to be matched with buyers.
So you're bullish on the commodities, is what you're saying?
Yeah, the underlying fundamentals are starting to line up. The technical patterns there. It's been one of the best performing commodities. I mean, it's lumber, nat gas, and silver on the past month. They're all up over 50%.
Fantastic. You just mentioned the lumber. We've been getting a lot of questions regarding this commodity. What can you tell us about a chart?
Oh, so lumber hit 800. The deal with lumber is that there's a couple things that occurred. Yeah, the dollar is so low. We import most of our lumber from Canada. There has been these tariffs that the U.S. implemented on there, so lumber is already going to cost more. There's social distancing measures that are occurring at these sawmills, so the production's down. Now, if you go to the demand side of things, with interest rates at 2.96% on the 30-year, people are starting to move out of these major cities into suburbs and have houses built. And then you have people that receive stimulus relief checks. What did they do with the money? They went straight to Home Depot, Lowe's, and Menards, and bought all the lumber there. So you have you have your own fight going on to get any available lumber to build small projects out there. So there is a tight physical squeeze on lumber at the moment.
Well, I just wanted to show that, just to highlight that those are the September futures, the prices for the September futures. Just wanted to highlight for our viewers. Phil, what are you looking at in terms of commodities if we put aside the one that we've already analyzed?
Well, we're still looking at the agricultural markets like corn and soybeans. You know, corn prices were elevated and beans over the last week or two because we had some storms that moved through the Midwest. They had damaged some of the corn crop. They didn't really affect soybeans. We saw prices come up those resistance levels. Now beans are back down at $9. We've been picking up put options for November on soybeans, December on corn. We anticipate prices will move back down to about $8.40 to $8.20 on soybeans, and then corn prices should push back down at a low $3.
So do you think that a trade deal between the US and China are kind of the so-called phase one are helping corn prices?
Well, it's another market. It's another situation that's very fluid. I mean, one minute we're working with China, next minute we're against China, and then also, China has their own problems with inside of it. So each one of these countries is going through some political turmoil right now and are tending to pin against each other. The crop is going to be fantastic. I think that they overrated the damage that was done to the crop. That's why I'm bearish on prices.
Well, let me ask you one final question. I just want to move very quickly to the USO index, which is off by 0.5%, or actually 0.9% in pre-market trading. What is your opinion regarding the oil majors from now till December, or let's say the first quarter of 2022? Do you believe better times are coming since most, let's say, of the majors are shifting to greener energies?
Green energy, if we shift to that, you're going to start to see prices of silver and platinum actually increase because they're a major component in solar and wind. I think that the majors are going to do well, but they need to see that pickup in demand from crude oil. So you got to monitor the weekly EIA data and see if we can get a more normalized spread, and then you'll see those majors lift up.
All right, thank you very much. Phillip Streible, Senior Analyst, Blue Line Futures. Thank you so much for joining us and have a great weekend.
You too, have a great weekend. Thanks for having me.